This is Trade of the Week. I'm Zinati Kuma, and this week we kick off with the JSE's Blue Label Telecoms and Glencore before getting into the New York Stock Exchange's Ball Corporation and Essential Utilities. And joining us with his analysis of these counters is Loyiso Mpeta, CEO of Mshindi Bingwa Group Holdings. Thank you so much for your time, Loyiso. I actually even like the fact that we're not just looking at JSE counters today, that we're also going into the US. There's a stock. We're starting off with the stock in which you dropped the ball, just as they are dropping a part of their name, as they basically try to find their new identity, and that is Blue Label Telecoms. Tell us why you dropped the ball here, because we last looked at the stock in 2023.
Yeah, it's been a while, and I must say, this is one stock that not a lot of mainstream analysts look at.
Yeah.
But we like to sort of look at those deep-lying counters that no one is paying attention to. And I must say, just industry-wide, there's only one particular individual that I know that absolutely lives and dies by this stock. I won't mention him for other reasons. But he triggered me to sort of look at the stock again, because I saw how much it has exploded over the last few months. And I said to myself, wait. We've actually covered Blue Label before, and I was quite bullish on it, emphasizing at that point in time that we were much closer to the bottom than, say, expecting a continued downside. So how come I haven't looked at Blue Label in a while? And by the time I looked at the stock, I was like, wow, you know, we really dropped the ball on this one. And this was a fantastic opportunity. But some very, very big lessons to be learned from this one. So let's not make the same mistake again. Let's see if there's still potential within the, say, near future with all these transitions happening. We've seen some cautionary announcements, potential listing for Cell C, as you say, name changes. So there's a lot happening at Blue Label. So let's look at it from a technical perspective, starting with a recap, going back to when we actually last looked at it, which was back in September of 2023. I emphasized this massive sell-off from this previous all-time high from October 2016 all the way down to R1.52 in March 2020, which was in excess of 90% that the stock lost. But I emphasized that this bounce to R7.50 was a wave one of whatever degree, and I was looking at this correction as a correction for wave two, and importantly that this correction must terminate above R1.52 to maintain the bullish outlook. Now at that stage there was still a lot of uncertainty and negative sentiment around Cell C and all sorts of other fundamentals which I highlighted, but I said technically it looks like we are very, very close to a bottom, and I emphasized this first sell-off for wave A, which unfolded clearly in 5 waves, this bounce for wave B, and then I said this looks like the almost terminal stages of wave C. And I looked at it as wave 1, wave 2. I labeled this sell-off as wave 3, and I was forecasting a bounce for wave 4 and one more sell-off for wave 5 to then conclude wave C. And wave C has to terminate above R1.52, and then we can see a resumption of the bull trend. But like I say, at that stage, the fundamentals were not looking rosy. But again, I emphasized that technically you can see a bottom before the fundamentals start to improve. So that's where we last touched on it. So the missed opportunity, like for example, I've had to utilize a functionality of my Trading View platform and sort of rewind back into time. That's why you see this disclaimer here saying replay. So I'm saying if we go back in time, back to say October last year, at this juncture, we could have seen that the trend was already reversing, because what we have here is a sequence of higher highs and higher lows. And at this stage, the stock was still trading at R4.69. And we can see that the stock bottomed in September 2023 at 235. So our key level of 152 held. So what I could have done with this hindsight was to then adjust my wave count and say, okay, wave C is complete. We have now wave 1, 2, 3, 4, 5, and this ABC would have been complete. So this is now the benefit of hindsight.
Yes.
But the same outlook that I had back in 2023 remained valid. But we were not in the stock by the time we saw this. So this is where we dropped the ball. And what has happened since then, I mean, has been nothing short of amazing. We can see how strong this rally has been. Now at 16 Rand 11. The last time we looked at it, it was somewhere around here. And like I said, back at around 4 Rand, we could have again had more of a technical outlook that the stock was turning around. So at this current juncture, from a wave perspective, what am I seeing? I'm seeing a very textbook wave 1, wave 2, a very powerful wave 3. So this is to say now, if you're not already in the stock, I wouldn't chase it unless I have a very, very long-term view, because there is still upside potential from the 5-wave outlook, because after the completion of wave 3, I'm expecting a pullback or a consolidation for wave 4, and then a resumption to complete wave 5. And looking at the fundamental picture, it looks much, much more positive now than it did 2 years ago. So that is, I mean, we missed that massive move, but you know, there's always lessons to be taken and a silver lining, I suppose, in terms of that outlook.
And maybe some nibbling that you could still do as well?
Currently, I always believe, so you say right now within wave 3 itself, I think wave 3 is at a very, very mature stage. At this current juncture, the probability is more for a pullback than continuation. So that's the bigger risk.
Okay.
That's the bigger risk. If you try to nibble now, you could be buying at a peak of wave 3, and if there's profit taking, especially excessive profit taking, we could see a sharp pullback. But you can never forecast these things. But it's all about those probabilities. Like I'm saying now, the probability looks greater for a pullback than for continued upside.
Okay. You know, I think one thing that's really sticking out for me is the importance of technical analysis, because as you said, the fundamentals back then were really not looking great. We didn't know that they would decide to pursue a separate listing of Cell C, so that they can go back to kind of their core business. So it's going to be very interesting to see the journey of Blue Label from here on out. All right, well, let's go into mining. Glencore. Glencore's been an interesting one. Of course, we know the commodity down cycle that we have seen over the last few years. But I think, when was it, last year or maybe beginning of this year, even though, you know, its peers were kind of trying to investors were trying to nibble, Glencore seemed to be underperforming its peers. How does that chart look like?
Yeah, and again, you know, with Glencore, because of its very, very overly diversified basket of commodities, you do get those instances where you may have one commodity like copper performing, but then coal will drag it down and vice versa. So it has unfortunately been a story of continued downside. So the last time we touched on Glencore was around May last year. And I emphasized that this rally from March 2020 to this all-time high in January of 2023 had unfolded in 5 waves. And I was looking at this correction as a classic ABC zigzag contained within this channel, and my lower sort of price targets was, say, between 70 and 80 Rand. But what we've seen now has been a much, much stronger sell-off down towards about 52 Rand. So the question then is, looking at the bigger picture now, what am I seeing in terms of the bigger structure? Saying that this correction has been much, much bigger than I had previously anticipated or forecasted. And when I look at the bigger picture, going back when Glencore was listed on the JSE, and from this bottom in 2015, what I'm seeing is a wave 1, 2, 3, 4. But you can see this wave 4 overlaps the peak of, or rather the price territory of wave 1. So this gives us a leading diagonal outlook. So what I'm looking at here is this sell-off from the all-time high, as being part of wave 4. And we can see from this peak to this bottom at 53.84, the stock is down about 56%. So the question is a bottom in at 53.84? I'm a bit on the tentative side with that, because when I look at this correction and I apply my best wave count, I'm looking at it as an ABC for wave W, and this bounces for wave X, and we have another ABC for wave Y. So this is a double zigzag, but a double zigzag has got the potential to evolve into a triple zigzag, which would then give us this bounce as wave X and one more move to the downside for wave Y. So we can see that the stock had this bounce at 53.84, currently a bit of a pullback. But again, looking at the fundamental picture, I think it's really a situation where anything can happen, and there is certainly potential for more downside. So I'm sitting on my hands on Glencore for the meantime, and I'll monitor price around this key level at 53.84. And yeah, like I say, you can never be certain whether a bottom is in or not. So if you are looking at nibbling, I would say it has to be based more on a valuation perspective and also having a longer term outlook should the stock continue lower. So yeah, I'm a bit on the fence when it comes to Glencore at the current level. But looking at the bigger picture, I am looking at it more as a leading diagonal currently in wave 4, but wave 4 with the potential to go lower.
All right. Well, let's go to the other side of the fence. We're going to the US now. And the first stock that you're giving us is Ball Corporation. I don't think you've touched on this one. What do they do?
So they into packaging. So if you look at your beverages, foodstuffs, they do like your aluminium cans.
Oh, so kind of like maybe an Nampack.
An Nampack,
Yes,
yeah, an Nampack, actually, yeah. So that's what they do, yeah.
Okay. So why are we actually looking at the stock today?
So this is more of a cycle play. So what I have here is the price chart of Ball Corporation, and I've overlaid the S&P 500 on top of it.
Okay.
Now we know the constitution of the S&P 500 changes over time, and the primary drivers change over time. And we can say over the last 3 years, the S&P 500 has really been driven by the Magnificent Seven, which has been driven by AI. So what you have now is, for certain non-tech stocks, is a disconnect or decoupling from the S&P 500. So what you're looking at now from a cycle perspective is you have the broad index making new all-time highs, but you've got solid stocks like Ball Corporation which are behind the curve when you look at them from the S&P 500 perspective. So I'm saying these are your high quality laggards which could play catch up.
All right.
So if you're looking at more of a rotation play and also looking for stocks which are uncorrelated to the S&P 500, this is the kind of companies you're looking at. So there's something interesting which caught my attention with Ball Corporation, and that is when you look at it from this all-time high back in November 2020, it had this very strong sell-off where the stock shed about 58% and bottomed at 42.81, had a bounce, and then had another sell-off which bottomed at 43.51. So this bottom at 43.51 is almost at the same level as this one at 42.81. So this gives us a double bottom, which is a bullish reversal pattern. So that's the first signal. Now, without getting into the detail of this sell-off, but when I did apply the wave count, I do have an ABC zigzag. And also when I look at this now, I'm looking at it as an unfolding impulse, 1, 2, and you can see the second wave did not make a new low relative to the previous bottom. So the rule here is wave 2 may not retrace more than 100% of wave 1. That is, wave 2 cannot make a new low relative to the beginning of wave 1. So that rule is intact. So if this wave count is correct, then it means Ball Corporation is in the very early stages of a potentially powerful wave 3, and then we can anticipate a correction for wave 4 and further advance for wave 5. So we've got a double bottom, we've got a zigzag which looks complete, and now we have a setup which is within the rules and guidelines of an impulse. So the bigger picture for Ball Corporation does look very bullish.
All right. Well, let's get into another stock in the US, and that is Essential Utilities. What does this company do?
So this is another one of those utilities companies in the US. They are more like a Joburg water power type company. Remember, we've spoken about how so many of the essential services companies, water, electricity in the US are publicly listed. So this one is in the water supply as well as supply of natural gas. Okay,
because we've spoken about one, I forgot what its name is, an electricity supplier.
Yes. So it's been those regulated essential services providers. So that is what they do, supplying water as well as natural gas. So like with Ball, I've overlaid the price chart with the S&P 500. And you can see, say, from about 2022, there's been a decoupling where the S&P 500 has continued to make new all-time highs, whereas the stock has basically been in a very strong consolidation. And looking at it from a wave count, I actually have a very long-term wave count where you can see wave 1, wave 2, wave 3, and this consolidation from this peak in February of 2020 at this all-time high has been for wave 4. So taking a deeper dive into this wave 4, how am I looking at it? We can see from this peak the movement has generally been sideways, and this is a classic wave 4 triangle, which is characterized by this wave A, B, C, D, E. And according to this wave count, wave E has bottomed at $33.18. So $33.18 is our invalidation level. And if this is correct, then we can label this as wave 1, wave 2, and therefore this bounce could be the early stages of a potentially powerful wave 3. However, wave 2 can continue lower, but again, the golden rule is 33.18 must hold, and that will then maintain the bullish outlook. So what we see with Ball and Essential Utilities is pretty much the same, sort of like a rotation play, saying, you know what, the tech stocks have driven the rally in the S&P 500, but you still have good, solid companies which have sort of lagged behind over the last 2 or 3 years. And I think also when you look at the earnings revisions in US stocks, there is a bit of a cyclicity and rotation starting to kick in now, because those tech stocks have really run very, very hard. So you need to start looking at those which have been behind the curve that could start catching up as well. Those two present some good-looking opportunities there.
Lovely. Well, thank you so much for that very, very insightful technical analysis, Loyiso. You've really given us food for thought today. That was Mshindi Bingwa Group Holdings' Loyiso Mpeta. That's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.